Portfolio Builder members, welcome to our Wednesday Trade Alert where we trade the SPY ETF. Today is the Fed day, and the big news is that the Fed has had to step in and pick up some $150 billion worth of treasuries in the last 48 hours. And this is because overnight lending rates have been spiking because of a dollar shortage. And so there's a whole bunch of stuff happening that the analysts blame the cause on. One would be that the debt ceiling was suddenly increased, and now the Treasury is aggressively trying to build up its reserves. At the same time, we have the collapse in the bond market as everyone's trying to rush to the exit on TLT, or those long duration bonds. And so we'll take a look at all of this and how that impacts our decisions in today's Trade Alert. Let's see who we have live so far. If you're live and want to say hi, please post in the chat. And we'll get this show on the road in a few minutes. Okay, we got a few people joining now. Welcome. If you want to say hello in the chat box. I also have a free bonus trade alert at the end of this video, so if you watch to the very end, you'll get to see it. It's a speculative trade. We don't put those in our track record because our program's all about conservative growth. But for those of you who do want a very speculative trade, I'll show you how I would go about it. Hey Ernest, how's it going? Morning Ryan, 5 billion. And so yeah, we do have a bonus trade at the end of the video. If you pay attention to the very end, how I would play the Fed day with very low risk, high reward potential trade. Tom's in here. Hello, Rocky. Welcome to the live stream, buddy. Rocky just joined our program recently, and we even did a FaceTime. So he's one of the few people who knows what I look like. Morning, Dean. And again, for people joining in right now, we have the important Fed announcement coming up. Perhaps even more important is that the Fed has been buying up treasuries to the tune of about $150 billion in the last 48 hours, signaling that we have some Fed rate cuts ahead, and more importantly, quantitative easing. Ivan, welcome. How's it going? Rakesh, welcome. And I do want to say that at the very end of the video, I have a bonus trade. It's not going to be part of our trade alert, but stick to the end. You can see how you could potentially put up about $60 and turn it into $2,400 if we get a pop in Apple between now and next Friday. Okay, guys, so let's go ahead and get the show on the road. First, I'll start off with a few testimonials. I haven't been showing or collecting testimonials until recently, but now we are starting to collect them. And if you do leave any testimonials in the chat box, we appreciate it, and I'll screenshot it. Murray, welcome. Murray's been following us for quite some time with the full program. So welcome, Murray. How are you doing, buddy? Rakesh wants to know if the SPY will go up after the Fed rate cut. We will be covering that in detail today for sure, so we'll get to that in a minute. And again, I do have a bonus trade at the end of the video, very speculative trade that risks very little but can have a gigantic return if our predictions are right. And my expectation is we're going to get a little bit of a pop maybe today, tomorrow, Friday. There's a huge option expiration event happening Friday. That's going to let loose a lot of capital. So I actually think that we may see a lot more bullish moves into next week versus this week. But we are positioned in case we get a huge pop today. What's happening right now is that people are getting out of their bond positions, mainly just the big banks and these huge hedge funds. And when they were trying to get out, it was causing the rates to spike very rapidly and causing a dollar shortage in the financial system. So now in the last 48 hours, Fed had to step in, print $150 billion, and let these bondholders out. So we've been talking about this event happening for several weeks. And what I've noticed is all these things, for the most part, that we've been predicting have been happening faster than expected. So we'll definitely take a good look at that. Just quick few testimonials we've collected recently. We'll go through a short presentation what we're about. We'll take a look at the most recent trade alert, and then we will look at all the important news information that's hit in the last 24 hours. And of course, I also have my Twitter feed open so that I can keep look at anything critical happening as we anticipate what the Fed will do. Okay, so this is just a few testimonials we've collected. I'm going to keep this document growing. If you are listening and have done well with our program, we'd love to collect your testimonial, especially you, Murray. I know you've been following for quite some time with a lot of capital, so we'd love to get a testimonial out of you one of these days too. Oscar says, Jason, no one is dead on, but you are very close. Thank you for sharing your knowledge. Very impressive. Rich right here. This is the best service I've ever subscribed to. The gains are small, but really consistent, along with downside protection. Stephen Lane. Stephen Lane's been with me for quite some time. He used to follow some of my more aggressive programs that did very well. We took a break in 2018 to build our platform, which is what you'll see our trade alerts are illustrated from. But says this program is very good in up and down movements. We've got some text messages from a client named Kirk who's been doing very well with us for quite some time. I think he's talking about our trades in June when we had a pretty nice return with Cisco and Microsoft. Then he had another good day on Apple he's talking about, and then he's texting me about his profits on the TLT. He was up $8,500, I believe, on Monday on the TLT and asked if he should get out. He might have actually timed that better than I did. Now, our program isn't trying to be hyper trading, so that is one of the setbacks, but that's what makes this so passive and easy to follow. We now have 18 people on. Welcome. If you're joining in live right now, I just want to let you know, if you do watch to the very end, we have a bonus trade alert. That's how I would personally play a speculative position related to the Fed funds meeting today, which we'll take a look at the very end. Now, it's not part of our normal track record because this program is more about trying to get first base hits consistently with very little risk. And one thing that's really neat about our program is we literally have a 99% success rate. No other advisory has even seen a 10% success rate. I know this because I used to be the guy who managed large financial advertising programs to sell everybody under the sun. And in just over 10 years of doing this, there's a million reasons why you don't get the result of the advisory. Number one, you don't know when they're going to send out a trade alert, so you're never ready for it when it does come out. Number two, they're trading highly volatile products where the price is jumping around, so you can't get the same fill. Number three, when they have bad trade alerts, they love to just sweep it under the rug. That's one of their favorite tricks. And then number four, they don't tell you position size, so you don't know what percentage of your total assets to put into the trade. Fred Cook says program is working fine. Thank you, Fred. Love to get everybody's feedback. And so our program, the reason it does work so well is because we have extremely easy, on-the-go, daily retirement income trade alerts at a predictable time. Noon Eastern, the trade alert comes out. It's a little bit before that, so I'm taking screenshots of the trades about an hour before noon. We send it to our production team, get this out to everybody via text message and email, and then we go live so that you have the opportunity to talk to me and make sure you get filled and make sure you understand the rhyme and reason behind the trade alert. Dean says these trades take 30 seconds a day, but who's counting? And my dad says it takes less time for him to take out the trash. I ask you, Why make investing complex? Don't you have better things to do with your most precious asset, your time? And my promise to you is that I will protect your assets and show you how to pick the low-hanging fruit. Our put options hanging right below the SPY and TLT ETF make it impossible to lose very much money, period. So if you have a portfolio and you're just letting it sit there with no protection and no hedging, you got to ask yourself, is that really a smart decision right now? Realizing we're in the middle of a trade war, we have central banks around the world in negative interest rates, and we have a 2020 election coming up. So there's a lot of risk out there that perhaps you're not aware of. The goal of this program is income and safety, and it is not growth or speculation. Now, I love doing speculative trades and have done very well with that in the past. But in 10 years of doing this, after figuring out who really wants to pay for our advice, it's people who are going into retirement who have no business trying to speculate with the capital that they have saved up throughout their lifetime. Now, I am throwing out a speculative trade at the very end of this video that I really like. It's not a trade I would do very often. You need very important catalysts to make a trade like that work, but you'll see how we can leverage some capital that you have in your portfolio to get almost a risk-free bet on what's going to happen today and into next week. So again, it won't be part of our track record, and you'll have to have decent option knowledge to be able to follow it, but you will get a bonus trade at the very, very end of this presentation. Our target return on investment is only 1% to 2% per month, and we've only had one losing month of negative 1% in July with an average return of 2%. And I will say the only reason we lost 1% in July was because I was predicting that Trump would raise tariffs. We were 1 month early, and so we were positioned to capture a down move a little bit early. Now in August we had a great return, and that's when Trump did raise the tariffs. Now if you do watch this video daily and subscribe to the channel, which you should do, you will get to know exactly the rhyme and reason of every single trade alert. So instead of me just catching the fish for you, hopefully if you spend an hour with me every day, you'll start to learn how to predict the markets yourself and how to design these trade alerts. Now we have a few different setups that are popular. Because we issue an income generating trade alert every day of the week, Monday through Friday, it gives you the potential to design the right portfolio for your lifestyle. If you wanted to do the light strategy, you would put $66,000 of capital to work, and you would trade the SPY Monday, Wednesday, Friday with 100 shares, and the TLT on Thursday with 200 shares. On top of that, we're recommending a buy and hold portfolio representing 10% of your assets in GDX. Now, with what we're seeing the Fed do in the last 48 hours, that's signaling to me that we may want to even increase that position or further diversify it because it does look like the Fed is getting ready for full-blown quantitative easing. And that may not be till next year or until after we have the next escalation in the trade war, but they're already jumping into the markets, even this morning, and adding liquidity and pulling out speculators out of the bond market. Now the next slide I did forget to update. Our Tuesday play is not doing Facebook right now. We did get a nice return on Facebook over the last 4 weeks. Before that, we've traded silver and Apple. And currently we're playing USO. So we'll look at some of the big news coming out this morning. In fact, as we're doing this recording, a lot of news feeds coming out about the attack on Aramco, the world's largest company, the biggest producer of oil. And I believe these trade tensions, not trade tensions, the tensions in the Middle East are going to continue to spiral out of control. So if you want to trade with less capital, don't follow the SPY trade. Just take our trade on Tuesday and then our trade on Thursday, but still have a buy and hold position in GDX. So again, the main idea is to have about an equal ratio of equity to bond exposure and then a 10% allocation into gold. We now have 20 people live. Thanks for joining us. I just want to mention that you can always scroll back to the beginning of the video so you don't miss out on anything we've presented so far. And we do have a bonus trade at the very end of the video where you could potentially turn $60 into $2,400 with a option trade on Apple. We'll show you how that works. Murray is doing this portfolio. A lot of people do this portfolio. If you're willing to put in a couple minutes right around noon, Monday through Friday, you can follow the full program. And this is the trade schedule. Now I will update it tomorrow to switch out Facebook as we're currently playing USO, United States Oil. And if you're getting the trade alerts but you don't see the actual trade in your email, that means your free trial has expired. So if you don't want to miss out on trades, call Dean 505-322-7515. Let's get you started as soon as possible. Reminder, we do have a webinar coming up in 43 minutes for our paid group. So we will have to keep this live stream pretty quick today. And that's where you can actually talk, not just chat. We can hear each other's voices. And then on Thursdays, we have a free webinar where anyone who's interested in joining the program can talk live with us as well. And so don't forget to subscribe to the channel and click the little bell so you automatically get the notification. All right, so first let's take a look at our general strategy and asset allocation and returns, and we'll jump into the most recent trade alert and then the news. Now I do want to mention that in the description box we have a lot of links for you. You can sign up for a free trial in the first link. You can view our track record, the document I'm looking at right now, right there. The live stream where I collect a lot of information each day is next. And then if you wanted to go and audit all of our trade alerts, we have links to all of them publicly available to you right now. So go check it out. Make sure to click that description box, and you can go analyze every little piece of our program in detail. Okay, so this is our current setup. We just reviewed how you could slightly modify it. And again, if you ever want to take a break because you're traveling or you're just going to be away from your computer, whatever the reason is, just go to cash. This is a program where we're trying to generate small, consistent returns over a long period of time and avoid big losses by having what I call a drag on our return, which is put options constantly below our key positions. So the only portfolio we do not have a hedge on is the gold market. So we're not doing any option trading on that portfolio. We're just buying and holding ETFs. So that represents 10% of our assets. I have 38% following the SPY, 12% following the Tuesday trade, and then 39% following the TLT on Thursday. And what's neat is when you do overlap the strategies, it makes it very hard to have a losing period of time. And in fact, our only losing period was in July, because I was jumping the gun predicting that Trump would escalate the trade war. Now, sure enough, he did in August, and we hit a 2.1% return. In September, we're at 0.9%. Now, if you do go to the description box and click on the track record, I'm just going to give you a quick overview of how to look at it. The first tab is the summary, where you get to see our summarized asset allocations, our returns per portfolio, and the total return. If you scroll below, you can see the returns on a monthly basis broken down per track record. The first one's the combined overlap return. So you can see what our return has been month over month since the conception of 2018 December. And again, that was during the Christmas massacre. It's just a good testament to how hard it is to lose with this bond equity portfolio. Here's our SPY returns. Very consistent profits. We did have a loss in July and May and a flat month in April. But other than that, we've been hitting our target and sometimes overshooting it. We have had 2 months in the 3% return and 1 month so far in the plus 2% return. So far in September, up 0.8. The portfolio on Tuesday is trying to achieve a higher return, but to do that, of course, there's no free lunch in the market. It means we have to take on greater risk. And so in December, we had a negative 4% return. Now, right after that, we had 7% in January, 3% in February, 3% in March, 6% in June. We had the same similar losses as the SPY in May and July, and August and September have been a little slow so far as the market's been having a hard time getting over this 300 level on the SPY. So we'll take a look at that. Buy and hold portfolio has wild swings to the upside and downside. That's why it's only a 10% position. And you can see we've had returns that are as high as 60% in May, 27% in December. And this has been a basket of gold or Bitcoin primarily to this date. Now, we were at a much smaller allocation in this portfolio back in December because if you remember, Powell was telling us that we had autopilot rate hikes coming into 2019 and a couple $1 trillion to pull out of their balance sheet. Well, that didn't last long. By February, they paused all that. By July, they did the first rate cut. And now by current, just in the last 48 hours, they have pushed $150 billion freshly printed money to go swoop up a bunch of bonds that are trying to find their way out. And I think they're going to head over to the equities market. Here's our bond portfolio return so far, very strong. One losing month in February, which funny enough is when the Fed actually capitulated, did the Fed pivot. And so that's where you get your summary. If you then go to the tabs, you can click and look at each track record individually. This is what I call our palette. This is what we're using as potential securities for this portfolio, although 99% of the time we're just doing the SPY. If you go down below, you can see all the stock trades. A minus is a sell, a plus is a buy. If you scroll over here, we have our option writing. So you can see where we are selling call options. And if you scroll over to here, you can see where we buy options, which are almost always put options. So we like to sell call options for income and buy put options for protection. Now, if you go down here, you can click on the Thursday trade, where you have a different palette of potential. We're usually trading the TLT. You can go to the Tuesday trade, which is right here. You can see some of the potential stocks we might pick individually in this portfolio. Here's our gold and silver. Now remember, this started off at a 2.5% position, then it went to 5%. Recently it went up to 10%. Because of adding all that capital to this portfolio, it says it only has a 50% return. If we hadn't been adding all this capital in the last several months, this is actually up over 200%. So just realize the additional capital does make the return look diluted, but this portfolio is performing very well with really not that many trades. It looks like we've done about a total of 21 trades in this portfolio. Okay, so that's a wrap of that. Again, you have access to that track record. The next thing I want you to know is you can go audit every trade and read every trade and watch every video by also clicking in the description box. And you'll go to these different blog posts, which one has all of our Monday, Wednesday, Friday trades, one has all of our Tuesday trades, and one has all of our Thursday trades. So you can go click and look at them all one by one and evaluate how they work. Make sure you're confident that this is a program you can follow. Just to give you a taste of what kind of returns we've generated on the Monday, Wednesday, Friday trades over the past several weeks, I've just went and opened a new window for all of the trades. Looks like I pulled up about 20 or so to review, so you can just get a feel. So in this trade, and also I'm summarizing our profit loss for you in every trade. Really, you just need to keep track of what did the asset do? Did it go up or down? And then what happened to the options? Did they go up or down in value? And so in this trade on September 16th, we had a $1.58 loss per share. September 13th, $1.84 profit per share. 19-cent profit per share. 27-cent profit per share. $2.39 profit per share. 26-cent profit per share. $2.59 profit per share. 33-cent profit per share. A loss of $1.52 per share. Negative $3.10 per share. Negative 26 cents. $2.72 profit. Negative 30-cent profit. 59-cent profit. 51-cent profit. Negative 59-cent profit, or loss. 10-cent profit, and this was actually a downward bet, so the market had lost $1.34, but we made 10 cents. So our strategy, because of the options, can actually make the SPY very profitable if the market moves down, if we do believe that's going to happen. And here's another trade where we had bet down. We made $1.32 while the market had lost $4.86. Now today's trailer is not betting down, so I'm not going to spend a lot of time on how we can use the options to do that. Let's review the most recent trade. So we've been preparing for a big move up in the SPY, and if I pull up a chart of the SPY, you can see what we're trying to break through. So I'm not a huge fan of using technical analysis to predict the future, but I do like to use it as a way to find support and resistance levels and to try to predict where it might move to if something fundamentally changes. And so the big change happening right now is that the huge amount of capital that was stuck in treasuries is finding their way out, and they're doing this by getting the Fed to get them to allow them to exit those positions. There's no way they could all sell and without causing a huge sell-off, which we can see right here in the TLT. You can see this dramatic sell-off. The Fed had to step in and start allowing these people to get out of these positions because the banking system was running out of dollars to finance itself, and we saw this with overnight lending rates spiking as high as 10%, not yesterday, but the day before. So it's been bouncing way above the federal funds rate, which it's not supposed to do. So this is just showing that the banking system has loaded up with so many treasuries that there's just no cash available for normal operations. And then when they all got freaked out and started selling in September, this was creating a rush for the exit. Now, where's all that capital going to flow to? I believe it's primarily going to flow to the SPY ETF. And if we do look at the big picture, the SPY's had a hard time getting past this level for a considerable amount of time. And I believe the catalyst that it needs to get above this will be good news on the trade war front, which I think we will have because of China's anniversary on the October 1st. Plus, it looks like they are running out of cash as well, so I think they need a little break from the trade war. Plus, we have the bond market has forced the Fed to start to allow them to get out of that position on the TLT, and I think they're all going to rotate into the SPY. So we'll see if this all plays out. This Friday, there is a lot of money hanging around certain $300 price point on the SPY. So we may not get a huge breakout in the next today through Friday. We might, but I think the big breakout will begin next week and into October until we get into what I'm calling a danger zone, which I think will be in this 310 to 330 range. So we'll talk about what might ruin the party for stocks in a little bit. Let's just take a look at the most recent trade. So the most recent trade, we sold to open the 303 call for 40-cent credit to our account, and we reinvested that 40 cents into downside protection on the 297 put. And so what's neat is an atomic bomb could go off and SPY could crash to 280, 270, it wouldn't matter. We would still get 297 a share. And so what that means is we have a maximum loss and a maximum profit for each trading period. And it cannot get any better or worse than what we see in this chart. So what happened in today's trade? SPY traded flat. Again, it's got some serious resistance to get past this 300 level. It was a little bit higher Friday, and then we had the attack on Aramco in Saudi Arabia, caused a little bit of a sell-off. But we lost 24 cents on the SPY, picked up 16 cents on the caller. Net return was negative 0.08. Not worried about it, and we have not changed our outlook. Now, again, I'm not going to reveal the trade alert that we've issued today because you'd have to go find that in your email. So if you don't have the trade alert in your email, it means your free trial has expired, and you should call Dean at 505-322-7515. Okay, so now let's go into the big news. But as you all know who are members, and most of you in here are members, today's trade is very bullish. And that's with the knowledge that we may not get the big move this week. It may start happening next week, but we don't want to be greedy, selling a very close to the money covered call today to get a bigger premium right now. You know, we might be able to pick up $1 with the at the money covered call, but if we get that huge spike in the SPY, then we would miss out. So now's a good period to be patient and to take on a little extra risk. So you can notice our put option's a little bit further out of the money than normal, and the call option is once again pretty far out of the money. So we are set to profit from the SPY appreciating and not from the call options or the put options. All right, let's take a look at the news, and then we'll do our bonus trade alert, and then we'll be over into our paid membership webinar probably right on time. So we'll have to flow right into that. Trump has told the Secretary of Treasury to substantially increase sanctions on Iran. So that's what we're looking for with our Tuesday play. On Sunday, we had a record spike on oil prices. And by Tuesday, which is the day where we can play more aggressive positions, we had a pretty good sell-off, which did continue into today. But I'm not worried about that because my expectation was that we would jump into USO, the United States Oil ETF, and then expect over the next several weeks that there would be rising tensions between Saudi Arabia and Iran, which is not a new story. This has been happening for most of this year as the U.S. put sanctions on Iran. So I think this will continue. We also have the Aramco IPO, which would benefit from higher oil prices. So there's a lot of reasons why I think oil prices should remain elevated and potentially create a bid for United States oil, which is somewhat protected from, obviously, from Iran. So with all that coming together, lower rates, I think everything's going to be headed higher in the equity space, but I think that USO can give us a really nice return in the next several weeks as this all plays out. And so, sure enough, this morning all the news is coming out. Saudi Arabia has pictures proving Iran was behind the attacks. Now, they have a pretty advanced missile system that they said has taken down over 200 missile attacks in the past. So it is somewhat surprising that this new technology was able to bypass their protection system. Here's the tweet about the Fed picking up $75 billion of treasuries this morning. So where's all that capital going to flow to? My best bet is equities and probably gold. And I think all these central banks are now going to have to come in here, peg their rates down, and start letting all these speculators out of these bond positions. Because if they don't, they may all rush for the exit at once, and now the governments can't fund their debts. So they got to be very careful here, and most likely just try to slow down the change of rates and try to control the security of the credit. Here's what happened when they tried to raise rates in 2018. Global PMIs crashed. And so now we're in a situation where they need to slowly as possible lower rates, try to support their bond markets, keep these governments happy with printing more and more debt, and try to get this back above zero. We'll see if they can pull it off, or are we headed towards another 2008 moment. Snowden has a good point. Bitcoin can protect my money from government theft. If you do follow our information, we've been recommending, instead of just having 10% gold, to have 8% gold, 1% Bitcoin, 1% Ethereum. Bitcoin's been a little bit flat right now, kind of stuck like the SPY. That SPY has a magic number of 300 that it has a hard time getting over. For Bitcoin, it's 10,000. But Ethereum has been making a very nice rally in the last 48 hours, up considerably. Now we're seeing Russia back Iran. So this Middle East situation could get out of control pretty quickly here, so it's careful to watch. Saudi Arabia came out with proof that it was Iran, that just as we've been speaking. It's been running through my Twitter. Fed, this is from Bloomberg. The repo rate, the overnight lending rate, spiked to 10%. It's really not supposed to do that. You could go read a lot of information about why the causes of this are. I think it's a simultaneous tax payments were due. The United States government raised their debt ceiling, so now they're aggressively selling treasuries. And at the very same time, we're seeing all these speculators who've been loading up on treasuries all year, trying to rush for the exit all at once. So you end up with no cash in the system, and the Fed has no choice but to print money. Jeffrey Gundlach is one of my favorite people to follow. He was extremely accurate 2017, 2018. A lot of his predictions have not played out yet in 2019. But he was betting on rising rates primarily and a flat stock market were really his two core bets. Now, and also a negative dollar and bullish on emerging markets. But I don't think... let me get back to that. And so he had a tweet yesterday or some kind of media comment about now's a good time to start looking at gold. Of course, if we get all the central banks printing, then gold's relative value will go up rapidly. I like GDX over GLD because if we think this is a long-term problem, then who's going to produce new gold? The gold miners are. Now we got Ray Dalio and Jeffrey Gundlach are both predicting a big move down on the dollar. That has not happened yet. China has been devaluing their currency, which has caused all of its surrounding trading partners to do the same. And this is causing people around the world to want to escape their local currency. There's now a record of Bitcoin addresses that have over $100,000 of value, sitting at 160,000. So that's very interesting. I don't think Bitcoin's going to zero or below 10,000, which was interesting because Tony Vase is this huge Bitcoin fanboy, and he still thinks Bitcoin's going down and the bear market's not over, which makes me scratch at my head because I'm not sure what world he's living on. The circumstances for being long Bitcoin right now are excellent. From zero hedge, repo rates explode most on record. New York Fed scrambles to conduct repo to inject emergency liquidity, calm markets. Here's a look at those cryptos. Ethereum doing well. My son has a little $500 account that he's grown from 200. He's 11 years old. We switched him out of Bitcoin to Ethereum about 2 weeks ago, so I think he's pretty happy about that. Here's the key stocks I track. Everything just kind of patiently waiting for the announcement today. Now the Fed is manipulating those interest rates on that TLT. Our trade from last Thursday, if you're following the Thursday trade, we do need TLT below 140 to hit the target profit. The way that works, though, because we do close it out with an entire day left of option premium, the lower the TLT goes, the more money we can make. But as long as we're below 140, the risk graph we showed you guys last Thursday is what our potential profit is on that. So we'll see how the market reacts to probably a disappointing rate cut. My expectation is they're going to say, all right, we will give you a 25 basis point cut. We're going to keep looking at the data, and we're willing to inject liquidity like we did today, which I think will be bearish for the TLT and bullish for the SPY, because it looks like they just want to try to control and peg that interest rate to be competitive with other bonds so that the government can keep funding its debt, but not let it get too low of a rate to cause even more problems. China's having a little weakness today, nothing too crazy. The SPY, the TLT, LQD I watch daily. This is the investment grade bond ETF. If the interest rate on corporate debt gets expensive, our loop where we have stocks being bought back by corporations comes to an end. So as long as this is at a high price, credit is nearly free for these top companies who primarily control the valuation of the stock market right now. So that's still looking healthy. Go to the middle of the market, your junk bonds, and that's actually stronger than the high grade market, which is insane. So this whole loop where corporations buy back their own stocks is there's no end in sight at this point. And even the Russell 2000, Stanley Druckenmiller's favorite indicator, is on the verge of breaking into back towards new highs. It needs to travel quite a bit higher, but that's looking very healthy. And this is at the same time where we may get some sort of trade resolution with China, or at least the hopes of one. So this is all looking very bullish. And this also would all drive the price of oil higher, which is why I like that Tuesday play on USO. Having a little weakness today, but I think the speculators who rushed into this on Monday were impatient, waiting for things to escalate overnight, but it may take a little more time to come out. I like Facebook long term. They have a monopoly in the phone app business as well as the social media business, and then add in their Libra coin, which may be a game changer around the globe to deal with governments who are printing money, causing their central banks to print money to fund these debts and making the value of each currency lose value. So if Libra could really come in and create a product that would really preserve wealth, I think it would be huge. So I do like Facebook. It's been a little bit of a lagger for us. We were trading it for the last few weeks, and we'll most likely be back at some point. But right now, I think that USO provides a better opportunity. Here's the yuan against the dollar. This is an interesting trade where you could use future contracts to short CNY. And that says CNH, but the one you can find at Interactive Brokers is CNY. Probably not the time to do it yet, but if we don't see a trade deal coming through and farming products actually being purchased, that's a trade I will recommend probably some point in October if we don't see something good happen on the trade front. Look at gold, stuck at that 1500 level. I think the central banks are going to put a ceiling on that price until the next major escalation. So that's why I like GDX. The market's playing catch up. Who's going to make the gold? The gold miners are. GLD we played for quite some time this year, did very well, as you can see in the chart, which is spot gold GLD. But now we're thinking this problem is going to be more long term. Now, if we do get that farming deal, and we also get some major concessions from Trump, I might think a major sell-off is due in gold. So that's something we're carefully watching, as it is a big part of our portfolio at 10%. Silver is something I would play in our Tuesday trade with a put below and a call option above. It's super volatile, but it's kind of like your Ethereum to Bitcoin, silver to gold. Let's look at crude. Been in quite a bull market since 2016, and I think this trend will continue higher, especially because of the motivation for this Aramco IPO, which is being partnered with all the banks. So I do really like our USO play for the foreseeable future. Now the catch is if trade war escalates, then perhaps there'll be a pretty sizable crash in USO and crude oil. Use the German bond to try to predict the US Treasury. We can't really trust the data out of China, but we know one of their key trading partners is Germany. So if they're having weakness, it gives us a good idea of what's going to happen before it happens stateside. And you can see that very close correlation. Now here's our bonus trade. This is not part of our trade alert. This is not part of our advisory track record. But if you did want to speculate with very low risk and you didn't mind owning 100 shares of Apple anyway, here is a trade setup where you put $22,000 on the line to buy 100 shares of Apple if it goes below 220, which you'll get at a small discount. And on the other hand, we're doing a bull call spread, predicting that we get a big pop next week. So this setup, we're selling a put to collect $2.43, and then we're using that to buy a bull call spread. And so if Apple were to travel to 232.50 by next Friday, the maximum profit on this trade would be $2,433, and your debit entering the trade today is only $67. So that's a neat way to take advantage of the options market and speculate on a big pop, not by this Friday, but by next Friday, because we have a lot of option expirations we got to get out of the way Friday before we may really see fireworks. Now, if we're wrong and we get a crash, of course, you're going to end up owning 100 shares of Apple. So that's how I would speculate on this current setup that we're in right now. And that's a wrap for today's Trade Alert update. If you have any questions, I'll keep the live chat open for a few more minutes here. And then we got to get ready for our paid member only webinar coming up in a few minutes. Any last questions, guys, before we get ready for our webinar? Hopefully, I know most people in the live chat are paid members, so hopefully you'll be able to hop on in a few minutes and we can talk the markets and see what other questions you guys have. All right, thank you so much for everybody joining and appreciate your time. Tomorrow we'll be trading that TLT. Hopefully we get a little sell-off so we can hit our max profit on that. Repeat the bonus trade? Sure. So I'll zoom in on it. Here's how you would enter this trade as of a little while ago. Your exact price may have changed. Let's see where we're at right now. Let's see if I still have the ticket open. So we're selling a put for next Friday. And that basically means we're willing to pay $220 a share for Apple, and we'd only be exercised if Apple were to fall below that. So assuming that the market goes higher, we'll just essentially get to keep that credit on the short put. Now we're going to use that not just to make a little bit of money, but we're going to use that to speculate on a much more aggressive play. So depending on exactly how high you think it'll go, the idea is to buy a more valuable call option and to sell a less valuable call option, and that's how you create your spread. Let me see if we got, so that's how you would do that trade right there. You think you might put it on, Fred? So realize you have to have $22,000 in your portfolio that's just in cash to oh, and Ernest wanted to see it too. So I don't know if you guys remember this, but back when the SPY was at about 282, right after all the Trump tariffs came out, we had like a week or so of pullbacks. We saw what China was going to do to retaliate. They just devalued their currency, said, well, haha. And a guy came out and put on something like a $15 million bet. Same idea on SPY. He sold a put and then did a spread. And so you're using your put to finance your spread because you have the outlook that, okay, I don't think we're at the end of the market cycle. I don't mind owning 100 shares of Apple in the worst case. And in the best case, if we do get a pretty serious pop, then I can make a maximum profit once Apple gets above 232.50. Now, if it just goes up to 225 or anywhere in that area, you're still going to be making money on the way up. Let me put that in a risk chart so we can take a look at that. And again, this is a bonus trade. It's not part of our advisory. It won't be in our track record. But I do know a lot of you guys like to have a little extra fun. And so here's how I would be doing that. So you can see your profits go up as Apple goes up, but it really jumps dramatically as we get up here. Why does this think our... Okay, so question says, yeah, so we have 10 of the bull call spreads and one put. So we're willing to sell one put because that's going to tie up 22,000 bucks of our account. We have to have that cash available. Now the bull call spread, because we are, we're financed, so we're buying a 74-cent call, but we're reducing it by the cost by over 50% by selling 43-cent call. So our cost on the bull call spread is 31 cents. So because we collected $2.43, we're here. Watch, I can actually make it a free trade. All right, guys. Actually, I got to get ready for our next webinar here, but we could continue. Most of you guys are in our paid group, so if you guys want to keep talking about this speculative trade, but the idea is, yeah, we sell a put, use the put to pay for the spread, and if we get a big pop in Apple, you make a lot of money. If it goes flat, you break even. If it goes down, you don't necessarily lose, but you're going to own 100 shares of Apple. Okay, so see you guys on the next webinar. Thank you, everyone, and looking forward for our new trade alert tomorrow.